Good morning, trading world. It is July 7th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. A few minutes from now, we have jobless claims due out. So, will the jobless claims news knock us back and then let us resume this flimsy rally, or just knock us back? Day before yesterday, I talked about a rejection at the 385, 386 level being overhead supply. We have rejected twice from that 385 level. So the third time is the charm. Either we break through it with a decent breakout, or fall with a decent size, or fail with a decent size pullback from it. In order for us to continue this flimsy rally, we will need more participation from XLE, that's the energy sector, and XLF, the financials. Also watch for the dollar and bonds to trade sideways to down to help with the continued rally as well. Let me bring up the key levels for today. Alright, here we are with the key levels of the day, starting on the resistance side. Our jack resistance is going to be the 385, 386, that very level we've been talking about for a couple of days now is overhead supply, very important resistance. Then we have our queen resistance level, 387 to the 389 area, and then king resistance, 390 to the 392 level. On the support side, we have jack support at 384 to the 383 area. Then we have queen support, 382 to the 381 area, and then king support, 380 down to the 376 area. The main thesis for today is bearish, closing below the 382.25 with a projected target low of between 383 and 376. Our alternate thesis is bullish, closing above the 383.25 with a projected target high of between 385 and 392. The current channel we are in spans from 379 up to 397. That brings us into the scenarios for the day. Alright, our first scenario is our expansive range day structure. We could look to set a decision area high boundary around the jack or queen resistance area. That's at 385, 386 area. Again, before chopping back and forth and pushing the low boundary. We're going to push that low boundary, close below that previous close, making this the expansive range day, and then we could actually see the rally start to continue or resume later on in the day. So that's our expansive range day structure. Well, let me bring up the next scenario. Alright, our next scenario is our trend day up. We open gap up, start with the fade back toward the previous close. We find support on or before that previous close, then begin the uptrend for the morning. We find midday chop around either the possible queen or king resistance area. The key thing about this trend up day is that the gap up could be so large, or the range could be so large, it could feel as if we're in a downtrend day just trying to make it back to fill the gap. So be careful of that. And until we break below that previous close, it is still a uptrend day structure. That's the second scenario. Let's bring up the last scenario. Our last scenario is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance area before spending the same energy we use going up to come back down the second half of the day. There is a vice versa warning on this day structure as well we want to pay attention to. Instead of continuing up, we could also find ourselves continuing lower, finding our midday chop somewhere around the jack or queen resistance area, possibly the king, and then the same amount of energy we use going down, we would come back up with. Those are the scenarios to prepare for the day. As always, your number one job as a trader is to protect the capital that you already have. We do that by knowing and understanding what we have at risk at each and every moment. I hope this helps. And as always, wishing you a positive trading day. Have a great one.